Good morning. Oil is up nearly 6% in overnight trading, gold is rallying hard, and every major index is pointing lower at the open. Because Iran just escalated military strikes across the Middle East, and the US is now preparing for a potential ground response. This is not a typical Sunday night into Monday setup. Geopolitical risk is back on the table. Here's what you need to know before the bell. All four major index futures are in the red this morning. The S&P 500 is down 1.71% in pre-market trading. The Nasdaq 100 is even steeper, down 1.95%. The Dow and Russell 2000 are both off about 1.7% to 1.75%. This is a broad-based sell-off, not concentrated in one pocket of the market. Now, and this is critical, these prices reflect overnight and early morning trades. When the regular session opens at 9:30 a.m. Eastern Time, volatility can spike, gaps can reverse, and the direction can shift. Don't assume pre-market moves dictate the day. But the signal this morning is unmistakably bearish. Risk assets are being repriced lower. Today is Sunday night into Monday, March 29th. The economic calendar is empty, no higher medium impact releases scheduled. That's actually notable. When there's no data noise, geopolitical headlines can drive the entire conversation. Earnings are light this morning. A handful of small cap and micro cap names report, Dare, YHC, and a few others with no consensus estimates, but nothing that will move the broad market. That means if the S&P opens down 1.7% and doesn't move much higher, it's all about the Iran situation, oil, and what traders think the next 48 to 72 hours hold. There are no economic surprises to hide behind or rally on. It's purely sentiment and risk repricing. Here's the sequence. Iranian forces attacked a power and desalination plant in Kuwait, killing at least one Indian worker. Yemeni Houthis, backed by Iran, launched a fresh strike on Israel. Israeli forces then struck an Adama chemicals facility in southern Israel, possibly hit by Iranian missiles or debris. And this morning, Reuters is reporting that Israeli leadership has ordered a major expansion of operations into southern Lebanon against Hezbollah. In the background, Pentagon officials are publicly preparing for weeks of potential ground operations in Iran. Asian markets are already sliding. Brent crude is tracking toward its record monthly gain. The risk that this escalates from military strikes to sustained ground operations is what's spooking traders right now. This isn't Ukraine or Syria. This is a direct U.S. allied flashpoint with Tehran. Here's the bull case read. This could be a short, sharp shock. Markets panic, oil spikes, and within days or a week the situation stabilizes or de-escalates. Oil already spiked. If no further military action occurs, crude could give back gains and equities rebound. Risk premium was likely underpriced. A 1 to 2% sell-off washes out weak hands and creates a healthier base. The bear case. This is the beginning of a broader regional conflict. If the U.S. commits ground troops, oil stays elevated for months. That means higher energy costs ripple through earnings and inflation. The Fed, which was already walking a tightrope on rate cuts, now has to hold rates higher for longer to combat inflation. Multiple compression in equities accelerates. We're no longer in a benign growth scenario. We're in a stagflation risk scenario. Neither outcome is locked in yet. But this morning's move reflects traders' pricing in the bear case as the baseline. A sample of posts reviewed on Reddit this morning showed mixed sentiment overall. A neutral score of plus 0.086 across 266 posts. The trending tickers reflected the split. Energy names like Dollar Oil and Dollar War showed bullish leaning, which makes sense, people betting on higher energy prices. But Dollar Buy showed bearish leaning. The most discussed topics in world news subreddits centered on the Iranian strikes, Pentagon preparations, and Israeli response. A post in Wall Street Bets joked about Bitcoin being in the gay zone on the rainbow chart, meaning volatility and feared trades are drawing retail attention. This is anecdotal, not scientific. But the mood is one of alert, not panic. Traders are watching the next 48 hours closely, expecting either escalation or a pause. No consensus on direction yet. Markets open at 9:30 a.m. Eastern Time. Expect volatility and fast-moving price action in oil, gold, and equities. We'll have the full market recap and live reaction at 5 p.m. Eastern Time on this channel. Until then, stay alert. For news and commentary only, not financial advice. Consult a licensed professional before making financial decisions. For news and commentary only, not financial advice. Consult a licensed professional before making financial decisions.